Let's turn now to the other big story today, the market. President Trump giving the markets a shot in the arm after he said the U.S. and China are, quote, getting back to the table on trade talks. President making those comments at the G7 summit as it wraps up in France. Eamon Javers is there live for us, and he's been there live throughout what has been a headline twist and turn over the last 48 hours, Eamon.
Yeah. Been a fascinating time here in France, Brian. What a difference a year makes and what a difference a weekend makes. I say a year because you remember last year at the G7, the president left taking off on Air Force One, angrily tweeting about the hosts, tweeting some insults, a real wipeout of a G7 last time around. This time, an entirely different tone. The president tweeting on his way out the door, "Thank you, France," a very upbeat and happy tweet that really jives with the unity message the G7 was trying to send here this time around. So a success there on the diplomatic front. And then what a difference a weekend makes in terms of the Donald Trump that we saw on Friday. Again, angry tweeting, imposing tariffs on China, the stock market wipeout that we saw, or the stock market sell-off that we saw on Friday. Today, though, this is a president who's making positive noises about China, saying that he wants to get to a deal, making nice with the European leaders, and then today offering us some insight, Brian, into his thinking process. He was asked if this roller coaster that we've seen in financial markets as a result of some of the president's statements, if he bears any blame for that, and he said ultimately no, this is just who he is. Here's how he said it.
The way I negotiate, it's done very well for me over the years, and it's doing even better for the country. They don't have the wisdom to know that you can't continue to go on where a country is taking 500 billion, not million, 500 billion with a B, out every single year.
So the president there saying that calling Xi Jinping an enemy on Friday, calling him a great leader today, that's just the way he negotiates. You don't get the sense, Brian, that this is a president who's going to change his personal style anytime soon, and sort of letting the audience there know and the world know this is who he is and this is how he's going to continue to operate. And we're going to all be following the twists and turns as this goes through the next couple of months, Brian.
Yeah, certainly. Eamon, it's been 2.5 years. I'm not sure who's still waiting for the style to change. Eamon Javers, great coverage from the G7.
That's
we'll
right.
see you soon, Eamon. Thank you very much. Well, if you don't
Thanks,
think
Brian.
that words matter, you're not paying attention to the stock market. We want to take a look at the market action over the past two trading sessions. Really, the 48 hours the market was open. Okay, look at this. This is Friday, 11 a.m. Stocks plunged. That is when Trump blasted China in a series of tweets, sort of that nasty language that Eamon was talking about. Now, we sold off here into the close. Then we went into the weekend, thankfully. Now, we had more comments from the president that sent futures even lower. Now, around 4 o'clock this morning, it looked like another big down day for stocks. We came in for worldwide exchange, and guess what? It didn't look too good. But then a whipsaw turnaround as the president said China was indeed ready to come back to the table. That's this here. Here's 600 points down. Yeah, we saw a 200 and 300 point pop at the open, and the market kind of stayed flat the rest of the day. The question is, how do you live through all of this? How are traders trading all the twists and turns from Trump on trade? Time now to go to trade school. Class in session with Mr.
Brian.
Tim Seymour.
Well, first of all, I wanted to point something out, because this line right here is 2930 is really the line we've been bucking up to for 2 weeks on every tweet. Good tweet, bad tweet. So as you said, we got into here. And then the E-minis, if you're trading Sunday afternoon, my family wondered why I'd left the beach and went to go look at the screens. Ultimately, we got
Did you really?
We were down another 35 handles in the afternoon. And in fact, so from the close, we were down a total of 60 handles, which was a total of 120 S&P points. We were down last night. Now, ultimately, you say, what are you supposed to do during all of this? And I think the most important things to continue to watch, remember, you need to watch the dollar, you need to watch dollar yen.
Yep.
The dollar index, the DXY, is a 2-year chart that anyone should want to own. And unfortunately, that doesn't bode well for the markets. The other thing guess what else went down right here? U.S. Treasuries. So the 10-year bond yield, in other words, a rally in bonds, a risk-off moment, was a place where we got down to 143 overnight before settling back up today. That's not great news. Look, based upon what I know, talking to a bunch of accounts on the street, this is pension funds who have to chase bond yields lower. That's the dynamic here. Relative value still favors those yields.
But are they
going
doing
lower?
So, okay, so your anecdote about Sunday leaving the family at the beach, okay,
Yeah.
That's the kind of
It was getting cloudy, too.
No, but let's be fair.
And I didn't have enough sunscreen on.
No, listen, that's the kind of market we're in. Everybody I know, our team on Worldwide Exchange, they get in at 2 o'clock in the morning, 9 p.m. at night the night before. Everyone's emailing each other because that's when we see Asian. That's when we see futures start to trade. Everyone is so now hinged on this moment to moment. We had futures move. I'll call it a 500-point move at 4:30 this morning. Who's doing that? Who's doing that?
Well, I tell you what, I hate to chalk it up to the machines, but high frequency.
Until 7 a.m. roughly when all the futures traders in New York got in. Now they're moving at 4:30 in the morning.
But those are thin markets, Brian. And by the way, this is probably one of the slowest trading weeks of the year. So a lot of people stayed on the beach. The bottom line is nothing has really changed in the last 3 weeks. We've been in a trading range on the S&P. The most important things, I think, are the Fed, which has largely been marginalized. But look, if you look at the market that has underperformed during these tweet storms, it's been autos, it's been semis, it's been things that really haven't necessarily snapped back, but there's parts of the market that every time you get one of these tweets, it's reinforced the investment case, and overall, that's where we are.
Can we bring a 2-year of the S&P, a 2-year chart, not the 2-year chart of the S&P 500 up? Because how do you trade this market? Carter Worth, welcome, by the way, and you've been all over this, and we look at this market, and many people say, well, we haven't really gone anywhere for a year and a half, but how is our viewer, the fast money, the CNBC audience, supposed to deal with a market that moves 300, 500, 800 points on a tweet?
Well, that's right. And that is a dysfunctionality that is treacherous, really, in many ways, whether you're long or short. But Tim really captured when he said nothing has happened. The interesting thing is we are unchanged, but when you have extreme volatility like this, it represents indecision, right? There are a lot of people who believe that the sell-off of August is a great opportunity, buy the dip. And there are a lot of people, of course, who think this is the beginning of a more serious unwind. So after the initial sell-off, the real plunge of August 1st through 5th, we've had 6 3-session moves of 4% or more. Basically, we've been gyrating around. And more often than not, you get resolved in the direction of the primary move. So the primary move is down. We've been backing and filling, and then you get a second down. This is exactly what happened, actually, in October, just before we got into real trouble last autumn.
Yeah, in fact, Carter, probably you should be at the telestrader. So, this is a 2-year chart of the S&P 500. I highlight him instead of me. Not him instead of you. Take it easy, son. All right, here we go. So January of 2018, and you can see Tim made the circles, but very nice job. You colored inside the line.
Thank you.
So here we have a market that, what are the key numbers, Carter? Is there a specific number on the S&P? We're at 2878 that we need to really closely watch right now?
I mean, ultimately, the minor lows of the past 4 or 5 weeks, let's say, weeks really, that we keep bumping up. I think we're going to break that sort of 28.20, and ultimately we test the June lows. I don't see a lot of upside, and it's not so much about the market, it's about the constituents. We have an increasingly narrow market, and that is a problem.
All right, Carter, thank you very much. Good stuff.
Great stuff.
Good.